Yes, sir. Good afternoon, everyone, and welcome to our discussion session. My name is Musa. I'm the company secretary and investors relations officer. First of all, we would like to thank the Capital Market Authority and Muscat Exchange Market for this session. Also, I would like to introduce the team here, Saeed Nasser, the Chief Management Executive, Mr. Madhu Kumar, the CEO, Mr. Shiva Kumar, the Deputy CEO, Mr. Sanjay GM, Medical and Life Insurance, Ms. Lata Nair, Deputy GM for Accounts and Finance. This session is designed to focus on the company's unaudited financial statements for the first half of 2022, which was disclosed at MSX website. Finally, at the end of this session, we will open the floor for questions and answers. Now, I will hand over to Mr. Madhu Kumar, CEO, to take you through the presentation.
Start with this. Go to the presentation. Yes, good afternoon to all of you. I'm Madhu Kumar, CEO of the company, and my teams are here as introduced by Mr. Musa. We are going to discuss about the first half of 2022 performance of the company. And let us look at the table of contents, and then one by one we will take it up. Hello, are you people able to hear us? Hello? Afra?
Yes, we're able to hear you, Mr. Madhu Kumar. Yes.
Thank you, because there was no confirmation. Okay, let us talk about table of content that we are going to talk about our mission and vision of the company, brief about the company's history, list of board of directors, list of senior management team, cash dividend history of the company, overview of H1 results of the company, shareholders' equity of the company, and immovable properties of the company as a glance, composition of investments and future strategy on investments, distribution channels of the company, and strength of the company, challenges of the company and industry, and future business strategy. Coming back to our mission statement. Our mission is to give consistent and stable, sustainable and uninterrupted cash dividend to the shareholders by adopting concept of quality of business coupled with pleasant customer experience. See, as a Oman United, we always look for quality of business, not quantity. And we wanted to see that, company is very stable and sustainable in the long run. That is our, one of the main focus of the company for the last many years, not the recent one, it is even in the past also. So, brief about the company's history. Company was promoted in the year 1995 with a paid-up capital of Oman area 2 million and listed in the Muscat securities market since inception. Present paid-up capital of the company is about 10 million riyals. The company has already reached the minimum limit of legal reserve of 1/3 of the paid-up capital. Company has already reached the minimum limit of contingency reserve that is applicable for the insurance companies. That is equivalent to the paid-up capital of the company, that is 10 million riyals. So therefore, we can say that there will not be any mandatory appropriations from the net profit to the reserves accounts. And board of directors. So chairman is Syed Salim bin Nasser al-Busaidi, chairman of the company since inception of the company. And Mr. Saud Nahari, deputy chairman. He is in the board of the company since 1998. Mr. Nasser bin Tamiz al-Ashar, board member and the audit committee chairman, and he is in the board since 2003. Syed Khalid bin Mahmood al-Busaidi, director and audit committee member, and he is in the board since 2003. Syed Salim bin Ahmad al-Busaidi, director. He is also one of the audit committee members, and he is in the board since 2004. Mr. Mustafa Ahmed Salman, Director and Audit Committee member. He is in the board since 2007. Mr. Hamad Ahmad Rashid is a Director and Executive Committee member, and he is in the board since 2021. Mr. Rahul Kar, Director and Executive Committee, Remuneration and Nomination Committee member since 2012. And Mohammed bin Noor Al Zardari is the Director and Remuneration Committee member since 2018. Senior Management Team, Syed Nasser bin Salim Al Busaidi is the Chief Management Executive, Managing Director, and he is in the company since 1997. Next is Muthukumar, myself, the CEO. I am in the company since 1991. Sivakumar, Deputy CEO, he is with the company since 2011. Syed bin Salim Al Busaidi is the Senior GM, Marketing Agents and Branches. He is with the company 1991. Mr. Sanjay Jha, Mr. Sanjay Jha, GM Medical and Life Division. He is with the company since 2012. Saida Maithur Al Busaidi, GM HR and Administration. She is with the company since 1992. Mr. Yahya Al Karusi, GM Claims. He is with the company 1992. Lata Nair, DGM Finance and Accounts, with the company since 1997. Ajit Prakash, DGM Underwriting, he is with the company since 2013. Mr. Musa Yahya Al Amari, Company Secretary and Investor Relations Officer since 2020. Next. Okay, dividend history of the company. Company has paid cash dividend of around 41 million since beginning of the company. And during the last 13 years itself, the company has paid consistent cash dividend of 32.1 million riyals. In fact, last couple of years, we have been paying 33.5 million riyals, and which is equivalent to 35% of the paid up capital. And coming back to our view of the first half 2020-22 results, our gross premium return is about 18.5 million, and underwriting profit of 2 million as against last year of 3.3 million. And this drop is mainly because of higher motor claims, which is, it's since last 2 years we have been enjoying good, loss ratio in the motor claims because of lockdown and all that. The traffic was less, accidents were less, but unfortunately now the claims started coming up. Because of that, our underwriting profit is down compared to last year. Investment in other income at 1.5 million riyals as against last year 2 million riyals, and this is mainly because of the market to market some first of market to market valuations. So total income 3.5 million riyals as against last year 5.3 million. Management expenses are almost the same. Profit before tax 1 million as against last year of 2.8. Then income tax 147,000 provision as against last year of 390,000 provision. Profit after tax 891,000 as against 2.4 million last year. So profit after tax 900,000 as against 2.3 million last year. So coming back to shareholders' equity, capital remains at 10 million, share premium 871,000, legal reserve 3.3 million, maximum limit we have reached, contingency reserve 10 million, general reserve 100,000, and fair value reserve of 179,000, and retained earnings of 3.75 million as against last year, 31st December of 6.3 million. It's mainly because of 3.5 million dividend paid during this year, during the first half. So composition and strategy of investments.
Any questions here?
Is there any questions, please?
At the end of your presentation.
No.
Okay. Coming back to composition and strategy of investments, being a conservative company, we always look for the sustainability and with the long-term perspective. So most of our investments are in fixed income. As of 30th June 2022, we are having 53 million riyals of fixed income investments. As against December of 59 million, and June 2021 was 56 million. Equity investments, June 30th it is 4.4 million, as against last year, June of 3.5 million. On the immovable properties, we are having 2 buildings, and that is just, we are self-occupied, and, next slide, you will be able to have more details about it. Coming back to the strategy, we were reasonably aggressive in equity markets until 2016. Our market value of equity portfolio as on 31st December 2016 was 20.4 million. Fixed income investment were only 39 million. But gradually we shifted from equity to the fixed income, and which has yielded a good result for the shareholders for the last 7-8 years. From 2017, we started reducing exposure by selling our equity investments. Now, considering the economic developments and the oil price and all that, we will be gradually allocating funds to equity investment based on the market movement, and that will be on a phased manner. Immovable properties of the company. Company owns 2 immovable properties. One is head office property, 9-story building, and the company has occupied 2 floors. The rest of the floors are rented out and generating rental income. The market value of the property is about 5 million riyals, and the book value is 2.42 million, leaving an unrecognized appreciation of 2.58 million, which has not been taken into the equity also, or it's not revalued in the books of accounts. And we have our own garage property, which is located in Gala. It's about 20,000 square meters of land with workshop building and staff accommodation block. This property is fully used by us for repair facility of our accident vehicles, but does not mean that all the vehicles are repaired here. We are only repairing about, about 1.2 million worth of vehicles in a calendar year. The market value of the property is 2.67 million, and the book value is only 309,000 riyals, leaving an unrecognized appreciation of about 2.36 million. Thereby, the total unrecognized appreciation of both properties is about 5 million riyals. Distribution channels of the company. Company operates with 12 branches across Oman. Company has 16 tied agents at 34 locations across Oman. And company deals with all major insurance brokers in Oman. And we are also having direct marketing executives. They sell our products in the online and wherever they are. On strength of the company, human capital, we have highly qualified and experienced members having long stint with the company. We are committed for meeting the Omanization guidelines. Finance capital, shareholders' equity stands at 28.23 million as of 30th June 2022, while consistent cash dividend paid out of 32 million riyals during last 13 years. Retained earnings as of 30th June 2022 stands at 3.75 million. Comfortable solvency margin amount. We are also a composite insurance company with the optimum product mix of general and life insurance portfolio. We deal with the insurers of record who have partnered since long with OEC. Challenges of the company and industry. Competition due to reduced level of business opportunities. Pricing pressure due to competition. Frequency of losses increased in 2022 as against 2021 and 2020 COVID-19 years. Increase the reinsurance cost for the market. Frequent catastrophic events like Shaheen adversely impact major and property insurance businesses. Premium amounts are not always getting paid within the agreed credit period, and it is affecting the cash flow. At times, we have to fund from our account to reinsurers to keep the reinsurance cover on. Future business strategy. We are always looking for organic profitable growth. Expand equity investments gradually. Increasing digital marketing presence and readiness for mandatory health insurance whenever its authorities are implementing it. Thank you so much. If there are any questions, we are happy to answer.
Yes, Mr. Abbas. Go ahead.
Good afternoon, Mr. Muthu, and good afternoon, the rest of the team. At the outset, let me congratulate you and the team and the board for being fantastic guardians of investor wealth over the last many years. Oman United Insurance has it's one of the few companies in Oman that has been a consistent dividend payer. So, absolutely credit where it's credit's due. But, obviously, as part of, how we look at companies, it's best to look what's going to happen in the future versus what's happened in the past. Now, when we look at insurance sector, not just for Oman United, we're seeing across the sectors, there's a lot of pressure when it comes to one is obviously on the top line itself, and secondly, loss ratios are creeping up in large part due to the motor insurance business. Now, as seasoned insurance professionals, how do you see this motor business sort of evolve in the next 2 to 3 years, and what's the strategy for Oman United Insurance Company? Because when I see the sort of net written premiums, there's a large reliance on the motor book. I think after your insurance ceding, 80% of the net written premium for the business is motor. So obviously, as a company, you're very, very closely tied to the fortunes of the motor business. So how do you see Oman United's strategy in a market like this, where loss ratios are only creeping up on the motor side, and where do you see companies' GWP contribution evolving in the future? Are you looking at other lines of businesses? Are you looking to increase your capital so you can retain more risk on non-motor businesses? This is just an idea to sort of see how the company will evolve in the future. That's my first question.
Sure.
Can I answer now?
Okay.
Yeah, Mr. Abbas, thank you for your observation. I think absolutely you're right. Motor business is under pressure because of the losses. And if you look at our numbers over the past 2 years, we were seeing the stress in the motor segment. Forget about the COVID years, but we were seeing the stress in the segment, and we have reached the business up to 20 million. And right now we are about 14 odd million. And we are comfortable with that because we are trying to segment and look at kind of customer bases, which are our own renewal customer bases, to ensure that the better loss ratios are a function in the portfolio. Added to that, we are also mindful that there is a need for price increase, and we are also reviewing it on an ongoing basis to correct it. On the other segment, if you look at it, we are a composite company. So overall, while we were aware of the pressure on the motor, we were also developing the other book of business. And as on 30th June, our non-motor book is at about 51%, and the motor book is at 38%, and the medical and life is at 11%. So we do see opportunities in the future as far as as the economy expands more into the non-motor business and the medical and life business as the market opens up.
Okay.
Is it, Mr. Abbas, is it?
Anything more to clarify?
No, I'm just wondering. Okay, so I think it's going to be a gradual shift away from motor, where it's not that you're going to sort of. I mean, this is just my understanding of your answer is that your growth areas obviously are going to be non-motor focus, is what I'm hearing. So it's not so much that you're trying to shrink your motor book, you're going to try and expand the other lines of businesses. But so my question is, when it comes to the retention ratios in the non-motor businesses, one of the challenges is the capital that is at your disposal. So is there an aspiration to sort of, retain higher premiums in non-motor businesses? And as a result of that, do you feel the current capital that you're sitting on is sufficient, or are you looking at a capital infusion of some sort?
Point taken. We have already acted on that, and as on the 30th June results, post the 30th June results, 1st July is our treaty renewal dates, and we were able to engage positively with the reinsurers. And I think we are probably one of the few insurers where the impact on cost, reinsurance cost, is not as high. And correspondingly, we have also, after the necessary board approvals, we have also moved at retaining more on certain businesses where we are comfortable with.
Okay. In the second quarter, you had a one-off. I mean, was it a one-off? What happened in the marine business? The loss ratio suddenly creeped up, and that hit your bottom line pretty hard. Was that like a one-off policy that was not reinsured adequately? I mean, what really happened in the second quarter?
Yeah, see, it's not like that. You are talking about the 129% ratio, right? Am I right, Abbas?
Sorry, you're not very clear. The other, I mean, I couldn't hear you very clearly. There's a bit of an echo at your end, Mr. Muthu.
See, are you talking about that 129% loss ratio in motor managing cargo?
Yes, right.
See, because it's it's a small, because the basis was very small, because that we retain very less actually, and because of that the percentage is there. Otherwise, the commission, see, when we are calculating the incurred claims ratio, we don't consider the commission on it, okay? See, it's only
Okay.
the incurred claims are worked out, gross incurred claims divided by net earned premium, okay? Without taking into the commission what we receive from the reinsurer. Because of that, otherwise, no, that is not the reasons for, our underwriting loss is mainly because of motor, not because of non-motor.
Got it. Understood. Okay.
Okay.
And you spoke about the kind of asset that you're sitting on in the form of real estate where the gain is not recognized on your financials. Is there any sort of thought in the direction where you could do a sale and lease back and then probably, free up some equity from these two properties that you spoke about in your presentation?
No such things as of now. Definitely, because this capital, head of capital, is the head office building. And another one is the garage, okay? Nothing is in the pipeline and no such thought process at present. Unless otherwise, unless otherwise the authorities, they say that you have to move out that industrial area. Maybe. So unless otherwise they move out, if they ask us to move out from that area, then that time, there may be something, but as such, there is no other thought process. For the garage side is concerned, Nala side is concerned.
Yeah, I was only looking at it from a value unlocking point of view. That could be like, companies like for Omantel is doing it, where they're sort of doing a sale and lease back of their head office space. I was wondering if Oman United Insurance is thinking in a similar direction, but that's fine. I take your point. My last question is on the investment income side. Now, when you're looking at investment yields, you're up, approximately on a 60 million real book size, you're looking at 5% yield. And you mentioned in your presentation that there is an appetite to move towards equity investments slowly and gradually. What sort of, eventually, what sort of equity to fixed income book are you looking at moving forward? I mean, the Omani markets have been very rewarding this year. I think people are sitting on big returns from last year and this year as well. So as a company who could invest potentially in Oman and GCC equities, obviously in line with the regulations, which sort of ratios would you be comfortable with when it comes to equity upon fixed income or equity as a percentage of your overall investment portfolio?
Yeah, at least, say right now we are with, 5 million reals in equity or something. And we will be able to increase it to another 4 to 5 million reals in the near future. Okay, that's maybe around 6 months time. That is our strategy. And moreover, it will be GCC markets and Oman market. But if you look at the performance of the Muscat Stock Exchange up to June, it was almost negligible. Okay. Now, whatever appreciation has happened only in month of July, and that too mainly because of the announcement of the merger and back Muscat announcements and all that. Otherwise, the market was flat. And say, let me also tell you from our perspective, when we talk about it, just not like funds, buying and keeping it and then, with the unrealized gain. We have to see that, whatever we are buying, we are able to realize it, we are able to bring back the money into our table. Then only when next year, when you distribute a cash dividend, we are not going wrong way. Okay, we don't want to give cash distribution of cash dividend and unrealized the gains. That is our philosophy always. Because once you distribute the cash dividend and next year market something happens and if you are not able to realize it, then we won't be able to maintain the solvency margin and all that. Okay, that is we have to say we are not like a funds or anything. We have to maintain the solvency margin to run your core operation. So that also we have to keep it in mind. That is why we are having a conservative approach.
Understood. Okay, fair point taken. And when you spoke about solvency margin, I was on another call speaking to another CEO of an insurance company, and he was telling me that CMA is in talk with insurance companies in Oman to change the way they calculate solvency margin, and possibly capital requirements for the business may be going up. Nothing is decided, but this is what we understood from the gentleman. Are you seeing probably new rules coming up where insurance companies need to have more than 10 million real as paid up capital? I know that you guys are very well provided in terms of the legal and contingency reserve, but are you seeing capital requirements go up in the business? And if yes, what's the plan for Oman United Insurance?
Yes, we are. CMA is telling the risk-based capital model they are planning to introduce. That's what we have heard. But last 2 years, we are also making, parallelly also that what they are asking us, what will be the contingency reserve if we go into that model. Okay. So by looking at it, it will be positive for us, it's because we are having a contingency reserve. Right now, it is part of the liability. Even though contingency reserve is part of the shareholders' equity, but for the purpose of calculating the solvency margin, it has been taken as a liability. So when the new risk-based capital model, that will not be part of that one, but they will bring some other things. So we will be positive. So that for Oman United, there won't be any requirement for additional capital to for the current business model.
Just to add, Abbas, against the required solvency of 3.8 million, which is required, we are at about 8.6 million.
Sure. Point well taken. And plus, with the contingency reserve, you guys are pretty comfortably placed. I mean, I completely understand that is a part of equity because it came from appropriations of profit over the last many years. So because I'm just trying to understand going forward, Oman United has been insurance company has been a very generous dividend payer. So I'm just trying to sort of, see in terms of the challenges that the operating business is facing. And of course, you spoke about your sort of strategy and your sort of outlook in terms of growing non-motor lines. But these things don't come easy, right? It's not going to happen quickly. It's going to take a couple of years for the company to sort of diversify away from motor. And I don't see motor loss ratios going away anytime soon. I feel loss ratios, at least when we speak to, people like yourself, loss ratios will continue to be elevated for a while. So I'm just thinking, what happens to a company like Oman United, who's who's so sort of focused on the motor business for all these years, and it's worked well for them. So I'm just trying to sort of link that to a possible capital sort of requirement going up, and then maybe dividends start coming under pressure going forward. I mean, that's just what I was trying to sort of see and make sense of.
It is I won't be able to make any forward statement on this aspect. It's always, the board of directors are there to recommend to the AGM. So we have to see that, still 8 months to go away from now. So we have to wait and see. And we have to see that, the trend of motor also going forward. Okay, if it is going to be positive, then it is a different thing. So everything depends on the business, which is coming up in the future.
Understood. And I think my last question is just something that came to my mind because everyone's talking about the mandatory health insurance that's going to be coming on soon in the country. How well is Oman United Insurance prepared for it? And do you feel you could get on the platform? It seems that not every company will be on the CMA platform to be able to offer these services. I mean, how confident do you think are your chances of being on that platform? And is that a focus area for you?
Yes, Sanjay, who is looking after this division, he wants to respond for your question.
Yeah, so coming to your question, definitely we have applied for primary license and we have applied for license and we are very hopeful like any other insurer. We are a major player in medical segment. So we are hopeful to get the license as and when it is decided. And as far as our preparation goes, the product, the mandatory health insurance product as domestic product is already approved by CMA for us. And internally in our systems and process, we are gearing up. We are doing everything which we should be doing to be ready for whenever it is launched. We are ready to take up the volume and everything.
And when do you think Sanjay launched? Given your conversation, since you're the expert in this domain, when do you think this product will be launched or will be made mandatory in the country?
It is not fair on my part to indicate on these things. So I mean, as and when CMA decides and declares.
He is also one of the technical committee members, but he won't be able to give any date for it or it is not in his hands.
Of course. Okay, understood. Thank you very much. Thank you very much for patiently answering all my questions and all the very best to you. Look forward to interacting with you soon.
Thank you, Mr. Abbas. Thank you very much.
Any further questions?
No, not yet.
United.
Any other question from any of the participants?
If not.
Hello?
Yes.
Yes.
Again.
Yes, this is Abbas's colleague Vishen. I'm sorry, I'm having some issues with my Microsoft Teams. So I'm the analyst who reports into Abbas from Vision Asset Management. I had a comment on the financial statements. I completely understand that from Q3 of last year, the reporting format is XBRL, and all the companies comply with that reporting format. But unfortunately, when it comes to the balance sheet, it's I'm sorry to put it, I don't know how to put it, but it gives me absolutely zero information whatsoever. It just gives me a share capital, which I already know, but it gives me no other information. Now, generally, one would go to the notes and dig out the information, but I've done that and I get absolutely no color on your balance sheet. So your notes talk a bit about what your investment book, etc., is, but a lot of line items are missing. Now purely from a reconciliation point of view, or just from sort of a financial reporting point of view, there's a lot of missing information. So at least if you could, in your notes going forward, put the balance sheet and income statement in the earlier format, because this XBRL format does not give us any information. And if that's a precedent going forward, it leads to a lot of missing information on a periodic basis, which would not be healthy for the investor community. Take that.
Okay, your point is taken, and we will, coordinate with the regulators and see that how best we can, set the things properly.
Thank you, sir. And this comment was in general across the insurance sectors, and we hired it to the other companies as well. Thank you so much, sir.
See, this XBRL, they have to come out with some insurance companies, terminologies are different, they should be different for insurance companies, but as of now, it is not there. But we will take up the authorities, whatever possible, we will try to do.
But the point actually is, I get the part where XBRL and MSX have to be engaged, but if it's a lot of other companies in their own either notes or on their website publish their financials in the pre-XBRL format. Now that itself is good enough for us as investors to just download and then get the relevant numbers. So majority of the companies actually do that on their own website, where they upload the financials in the original format, and that makes life easier for us.
Okay. Okay. Your point is well taken, and we will try our level best to see that it is done.
Yeah. And so just one last question. With regards to consolidation, we've seen that in the banking space. We've just seen that in the insurance space with, National Life and RS and now Ahalya. What are your thoughts on consolidation, in the sector, given how competitive the market is and how sort of, operating performance has been challenging? So how do you view consolidation?
No, as such, nothing is in the pipeline or, not in the thought process. But if there is anything, we will communicate to the media or in the MSM side. If there is, but as such, there is nothing, in the pipeline. Because it's, a strategic decision to be taken. As such, there is nothing.
Understood. Another thing was with regards to, motor premiums and specifically third party motor premiums. We've heard a lot of chatter on sort of insurance companies seeing the need to get those back to elevated levels because they've dropped due to competition. Have you engaged with CM in any conversation with regards to third party motor premiums? Finding a base level, sort of a minimum base level, because right now I believe there is no exact floor to a third party motor premium. If you could just shed some light on that.
Yeah, definitely we'll be taking up the matter with CMA, and then, we have to do anything, whatever we have to do it with their concurrence only. So that will be happening along with other insurance companies. That is the Oman Insurance Association. Oman Insurance Association will be representing the industry's problem to CMA Insurance Department, and then, it will be done. But it will not happen,
It's ongoing.
It is ongoing thing, but we won't be able to comment further on that. Because the CMA has to look into the solvency of the company and everything. So they will be also looking at it. Is it okay? Boss?
He's logging in again. You sure? Same way. He left. He left. Where is it? There. You have to be there for 1 hour. Finish. No, but there are people, no, he's there.
You have to ask now.
Any more questions from the participants? Otherwise, we will conclude this presentation.
Hello, friend.
Hi, yes. No, we don't have any questions from our side.
Thank you.
Thank you.
We don't need to wait.
No, we are.
Thank, yes, so
What is this?
yeah, thanks. We are closing the session.
Thank you.
Okay, we would like to thank the Capital Market Authority and Muscat Stock Exchange for arranging this type of, investors, interaction. And we feel that, these things will give a clarity to the investors and shareholders and, the future investors also of any company. And sincerely, we thank all the organizations, who has, made it, possible for this one. Thank you so much.
Thank you, everyone.
Thank you very much.
Thank you.
Thank you, sir. Thank you, at least, one talk is over.
We have.
Yes.
That's one.